Hello, my friends. Brett Pattison with Iron Gate Global Advisors coming at you from the financial capital of the West. That, my friends, is Salt Lake City, Utah. I'm excited for the conversation we're about to have about a roller coaster ride. That roller coaster ride was Q1, January through March 2016. And we were up and we were down and we were up and we were down. And for most people, the lows, the downs, were a lot harder emotionally, as is almost always the case, than the highs. We'll discuss that roller coaster and important principles that you've got to understand when volatility creeps into the market here in just a second. Before we do, understand this. The process for investing that we have at Iron Gate Global Advisors is not results driven. We have a process that's based on the probabilities of making money. It's about finding the right option strategy. It gives you a better probability of winning than losing. It's about finding a stock that's trading at a great value that over the course of the next 2, 3, 4, 5 years will grow your wealth. It's about those types of probabilities. It's about finding fixed income investments that are trading at 60, 70 cents on the dollar that have a high probability of making you money over the next 12, 24 months. It's about those opportunities. That's our process for investing. And that process helps you ride out those roller coasters that come, that certainly did come in Q1. Let's talk about Q1 and let's take a look at that roller coaster. Here's what happened in Q1. There were 4 main, I would say, timestamps, so to speak, on or during Q1. And the first one that took place started out right out of the gates out of 2016. We felt 11% in 16 days. It was the worst start in market history. There was doom and gloom all over the place. 2008 repeated. And anytime you see gold and doom and gloom in the headlines, wherever you turn, you're going to find people selling gold, and you're going to find some annuity insurance salesmen that take advantage of that. And so that's what we saw in that first point in that Q1 January timeframe. Well, what happened was towards the end of January, we started to rebound a little bit. We went up in late January and then fell right back down in mid-February. February 11th was that low point. Fear was equal to 2008. Doom and gloom all over the place. Again, when doom and gloom occur, gold and especially annuity sales individuals come out of the closet and start trying to make money. That's what we saw. And in fact, we saw some clients call us and say, I can't take it anymore. I need to go in cash. And at that point, we knew that this is probably a low point in that roller coaster ride, as we tweeted out and as we've said on these videos before. And that was a really important key point, that number 2. Number 3 occurred, right? We rebounded off the lows starting February 11th. We went 10% from the year's low. We went, according to the media, too far, too fast. And we saw that those salesmen still came out and said you should still buy gold and really crappy annuities. And by the way, if you want to know why gold, and especially annuities, why we say they're crappy, or why do people take advantage of fear to sell that stuff, call us. More than happy to discuss that with you, right? But then number 4 came out, and that's where we find ourselves. We've rebounded 14.5% from the year's low in 52 days. Some people are saying we've gone too far, too fast. And those same people are saying you should still buy gold and really crappy annuities, right? That's where we find ourselves right now. And if I were to say, hey, look at that chart for a second. Where do you think most people sold, right? Where do you think most people bailed during that roller coaster ride? And I know from experience, and again, it was the same thing as I always see, that number 2 was the low point for most people, where they cry uncle, they give up, right? Without that disciplined process, many of you may have done that. Certainly give us a call if you did. But many of you probably experienced that low point, either did sell or wanted to sell. You missed out on a great, terrific rally if that indeed was the case. So what did we learn, again, from the roller coaster ride? Here's some important principles, some of which are covered in our free ebook that we have just published. I'll give you more information on that. We urge everybody to read it. So what did we learn from that roller coaster ride? We learned this. We learned that discipline, as always, pays off. We've been in this game of investing in this industry for a very long time, and if there's one thing we know, it's that discipline pays off, and your process based on probabilities, it pays off. Number two, we know that a falling market is a great opportunity. We were able to sell options on a lot of underlyings. Spread trading, right? For those that are familiar with it, we were able to buy great businesses at valuations that were incredible. That these businesses have the opportunity to grow and to increase your wealth over the next 2, 3, 4, 5 years. It's a great opportunity. We also know this, that trying to time the markets is one of the hardest things to do. And for those that have tried that, you know exactly what I'm talking about. And I'm one of those individuals. Early on in my career, I tried to do it. And I don't anymore, because I would say that very few people, 1-2% of all investors, can maybe time the markets. Right? It's one of the hardest things to do and ultimately leads to destroying your wealth. The fourth thing that we learned, that we relearned again, is that volatility is the price you pay for returns. It's very simple. In order to achieve good, solid returns, which most people need to live out their life in comfort, you've got to experience these roller coaster rides. And this was no different. Those are the 4 principles that we learned. Again. Now, we do have a free ebook that we've just published where these 4 things are discussed in more detail, as well as a few others. You go to the website www.igga.com/6 mistakes. Fill out quick information. We'll get you this free ebook that discusses how to overcome the 6 mistakes that can destroy your wealth. We hope you learned from the roller coaster ride. We're optimistic moving forward. We don't try to time anything. We just stick with our process for investing. And ultimately, we know that it will provide the results that our clients are seeking. With that, if you have any questions, feel free to reach out to myself. I'm Brett Pattison. You can reach me by email at brett@igga.com, or you can reach out to my partner, Brian Hunsaker, brian@igga.com. More than happy to jump on the phone with you, discuss your portfolio, discuss the market, discuss anything you'd like to ask or discuss, and relax. We know that we can take it from here. Thanks, folks.
This is a purely public broadcast and is not intended to be personalized financial advice for any individual specific situation. Each individual's financial situation is unique, and the topics discussed on this broadcast should not be relied upon and/or considered as personalized advice. Specific financial securities discussed are not intended to address any listener's particular financial situation and should not be considered recommendations. This is for educational purposes only. For more information, please contact Iron Gate Global Advisors at info@igga.com or by calling 888-591-0334.